Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market update for Thursday, August 15th, 2019. Getting this one out a little bit late. I had to run out for a bit just right before the market closed today, so I'm getting back into my desk now. This video will be largely a recap of the video I did for members earlier in the day. You know, any intraday analysis, things like that, that's reserved for subscribers. So this is just the general broad market analysis wrap, and I'm not going to get specific at this point on price target. I'll tell you my thoughts on where I think the market's going, show you some key levels to watch, but we do have now, as of the other day, an official trade, an active trade on the markets on QQQ and the semis and some other things. So we're going to hold off on getting specific, but I'll share you my thoughts where things are going. Now, let me start with saying nothing has changed. Today was a consolidation day. We had QQQ down negative 0.11%, so about a tenth of percent down on QQQ, and we were up about a quarter point, 0.26% on SPY. Call that a flat day. That's a washout. Small caps were down a little more, so today was nothing more than a consolidation day. You'll see it a little better when I get to the daily and 60-minute charts. But what I did in the video today for members earlier, and I've done this on the public page as well, every now and then I'll jump back and say, let's not forget, to lose sight of the bigger picture. When the markets are moving quick, I'm hyper-focused on the intraday charts, everything down from the 60 minutes, even down to the 1-minute charts for my trading. But then I like to always keep an eye out on the daily charts. Why? Because if you get lost in the world, and it's sometimes easy to do when you're actively trading in the world of, 5, 10, 15-minute, 60-minute charts, and you're trading off all these levels, and you see these patterns, and you're short on a break or go long on a break over this trend line, et cetera, et cetera, et cetera. And you're targeting up here. Let's say here, I'll give you an example. Let's say you have a little falling wedge on a 5-minute chart or 15-minute chart, and so you're going to go long on that breakout, and you think you're going to target up here, wherever that number is. But if you're not paying attention, there may be a much more significant resistance level here on the daily chart. So right after you take the breakout, you hit that. So like I said, I like to keep an eye on the bigger picture. And then the reason I did that earlier today, updated this monthly chart. This goes back into the 80s, early 90s, late 80s, and it shows you the previous bull and bear markets are all on here. I don't have everything marked up, but the most important is this. This is our primary bull market uptrend line in QQQ. Lots of reactions on it back here when the bull market started, and the last bear ended, and then quite a few reactions along the way. A little stick save right there. Pierced it intra-month. But remember, a monthly chart, all that matters is how we close at the end of the month. So we've got plenty of time. So the two things that I'm looking for now to give me a sell signal, my longest term trend indicators, because we do not have that yet, and we haven't. We could get it, but we still have a couple more weeks left in this month. But the things I'm watching would of course be a solid monthly break and close. Got to close a month. Doesn't matter. Intra-month, you can snap back. That's why you have the skinny part of a candle. That's your candlestick shadow, and those shadows just show what happened intra-month, but all that matters is where you close. So other than the close below that trend line, I also want to see a close below. It's one of my favorite long-term indicators. Super simple, but it couldn't be any more effective, and that to me is the beauty of this one, and it just does a great job. Here, let's roll it back a little, of defining bull and bear markets. Turn off those trend lines, and it's the blue dotted line. This was the dot-com bubble. This was the longest bull market, longest and strongest in history up until this one, which just recently knocked it off. Took the title. Phenomenal job of defining that. Defining that means you pull back and it acts as support, and you trade above it, and every time you hit it, and again, don't worry about an intra-month pierce, a little wick like that. And I'll say this too, and I said it earlier, nothing is 100% effective. Every now and then you get whipsaw signals. The other thing I say to long-term indicators is that they're not going to get you in at the bottom of end of a bull market or a bear market. They're not going to get you in right at the start of a new bull, and they're not going to get you out at the top of a bear market. However, they do help to confirm that the primary trend change has occurred. And when I say primary trend change, when you're looking at a monthly chart, you're looking at the big bull and bear markets. These are all secular or cyclical bull and bear markets within a secular bull. What does that mean? Well, this is a secular bull market, but this was a cyclical bull up into the dot-com bubble. It popped in March of 2000, followed by a very strong correction. That's a cyclical bear, cyclical bull. Doesn't look like much here, but that's the big bull market that ended in October 2000. This, what looks like a little drop, is a 55+% drop in the Nasdaq 100. Even the S&P 500 dropped over 50% in the last bear market there. So, and then this is our cyclical bull market off the 2008, 2009 lows. The QQQ is the only one at bottom in '08, November of '08. Everything else, SPY, S&P 500, small caps, mid caps, they all bottom in March 2009. So that's that. And again, back to what I was saying with that 20 period monthly EMA, and look at the bodies on the candles, and it's just done a phenomenal job of defining the uptrend. And when we're in a bear market, when you're below it, then you have a sell signal like you got right there. And a couple whipsaws usually come near the top. We had a whipsaw right here after that first dip down, but actually the bear market had already started from that point right there in October of 2007. And you can see most of this bear market, it kept you, short or out of longs, and then it told you back here it was safe to get in the water, and that was back, and you can see the years down here, '03. So that's it. So let's keep that simple, and we won't need to cover this one every day because really nothing can change now, or anything that happens between now and, well, technically speaking, the end of this month, August 31st. It doesn't matter. But however, if you're heading into the end of the month, it's August 25th, and you're way down here, well below both of those, you're probably going to get that sell signal I was looking for. And there's a couple others, again, I covered on the indicators and all that on the video for subscribers today. But I want to just drill down a little bit, go to the weekly charts. All that matters at this point in time, or what I'm watching, I should say. It's not accurate to say all that matters, but what I'm watching are the trend lines off the December 24th lows in QQQ and SPY. We're just going to focus really on the large caps in this video, and that's the same trend line I've been highlighting recently on the daily charts. So as I mentioned last week, QQQ had hit the trend line where SPY had taken it out in its back testing. QQQ hit it and bounced, and the bounce was expected. From the drop off the highs, that's where I posted. We hit the 200-day exponential moving average. Same here as a 40-week when you're looking at a weekly chart. 40 period monthly exponential moving average, that is 40 period EMA on a weekly chart. So we hit that, we hit support, trendline support, price support, everything else, and we got the bounce, the typical reaction, but we're right back there. This candle, we're still back on the trend line again, testing this week. So it's not like a strong rally. If there's a lot of buyers in the market, you come back and you hit a support level, and it's usually off to the races after a correction. And so this is more indicative of just a consolidation within a larger downtrend with more downside to come. And again, that's my views for now. If it changes, if the charts convince me to change my outlook, I'll try to convey my thoughts to you as soon as possible. But right now, I'll make it very clear I don't see anything at all in the charts that indicate a bottom is in or right around the corner. What I try to do, I'm the opposite of a trend follower. I call them trend chasers. It's easy to say, trend is your friend, trend is your friend. Well, the trend is your friend until it's not. And when is it not? Which dip is the one you buy? Most trend chasers are people that say, trend is your friend. They don't realize that it's not just a pullback anymore until halfway or 2/3 of the way into the correction. Then they've been buying the dip or holding on to their longs if it was if they were, and then they flip short, and by the time they flip short, then the thing reverses. So my analysis is largely predicated on identifying major turns in the market, whether they're big turns like this or just even on the intraday charts, 60-minute, 15, 20 minutes. So right now, what I'm seeing in the charts is that this is just a typical consolidation here. Let's go down to the daily charts and just look at that there. Here's that trend line I mentioned off the 24th, and there's QQQ. Again, we hit it last week, and we bounced as expected. At that point in time, we also reversed and tested the 200-day EMA, that red line. We hit it twice. There's a 200-day, and we had the expected bounce, hit the top of my max bounce range twice last week, and then we've come back. And so simply right now, we hit today. You zoom in real tight. We hit yesterday and today. We hit that trend line. Today we pierced it intraday, but that doesn't matter because now we're on a daily time frame. So all that matters is the fat part of today's candle, the body, meaning we close right back up on the support. So it's that simple to me. Is that these are key support levels, and a daily close, a solid daily close, like I like to say, the redder the better. Below this 180, we'll call that 182. Here, let me just make it simple. We're at 181.98. Give or take a few pennies, we're talking $182 security. That's it. That's I think if we do that, that would certainly be a the next sell signal, so to speak. But I'm really most interested in these lows right here. If you recall, and in recent updates, there were 3 check boxes that I was looking to check for the bearish scenario. 1, 2, 3, and those were number 1, and again this just goes back to earlier this week. I wanted to first see a fade, a complete fade of that big green candle from when the White House came out and tried to pump the markets by saying, coming out like there was some positive, news with the trade talks, and the market took it that way, like they usually do. Pavlov rang his bell, and the dogs came. They started salivating, so they bought that. But then we faded it 100% and then some. That happened the next day. So that was check mark number 1. Check mark number 2. I said I wanted to see those gaps from last Tuesday or Monday before, August 5th, I think that was right there. I wanted to see the prices fall back below that because that was key support. And that happened. And then the final, what I think nail in the coffin will be a break below the recent lows from the same day. That's August 5th, I believe. A big red candle, because that will do 2 things. It'll take out the recent lows, which are obviously always an important, especially a big low like that, a lot of volume around it, a lot of trading was tested again. So an important level, technically, no doubt about that, as well as a 200-day EMA. So this one's still pending. So it's not really a check mark yet, but that would be a little question mark, and that's it. So nothing goes down forever. You look at any correction period, you usually don't see a correction occur like this and then this. This is corrections. You get kickback rallies and then other legs down. You saw it here. And whether this one's over or not, time will tell. So just to tell you what I don't want to see, being that I'm short and bearish right now, I don't want to see a move over this level here, the recent highs. That's what, give or take. Let me turn my lines back on there. You can say, to be safe, the top of that candle. I don't even want to see us get anywhere close to the top of that candle. It would certainly not help the bearish case. It would chip away at it. It's not going to kill it completely, but that's where we're at. So we're just, another way to look at it, anytime you have a consolidation range on a stock or the markets, that's what this is. You're going to break one way or the other. And usually, not always, the next break of that direction will determine the next trend, and that's still the one I favor right there, break to the downside, but we'll see. All right, that's QQQ. Let's turn those lines back on. That's busy, a lot of lines there, but I have an official trade on this now, so can't cover the price targets on my other boards. That's for members right now until that trade's closed out, so we're gonna have to be a little vague or non-specific on the price targets, exactly where I think we're going from here at this point. SPY daily chart, same story. Well, similar story, I should say. SPY broke the uptrend line from the off the December 24th lows. Big gap down, back tested it, tested a couple more days, and fell down. And it's really the same story. Forget about all these lines. Let me turn that off. Let's keep it real simple. Just like QQQ, the recent lows or the recent highs. That's where bears win, I believe, if that happens, if they take that out. And bulls win, at least in the near term. I think that would certainly bring in some short covering and probably cause the markets to make another run at and quite likely above those highs. Not what I think will happen as of now, but let's see what happens in the next few days. Let's see how the charts look. But again, I don't see any developments right now that are overly concerning, that indicate we might, that the correction might be over. And then finally, take it down to the 60-minute chart. Here's those trend lines I highlighted recently. Yeah, that one was popped with, again, that was news induced with the White House coming out with positive spin on the trade talks there. And that was that thing, the big pop that was faded. And again, it wasn't just a pure random guess. I mean, I figured it would be faded and wanted to see it faded. And we also had negative divergence. So it was also there was also a technical basis for that reversal, or case to be made, that we put in the negative divergence there on the 60-minute time frame at that high. And then, of course, we dropped. So this trend line here was really taken out. I always say, technicals will most often the news, or not just news, but the fundamentals are priced in. They're reflective. But there can be a big market moving news event that comes out of the blue like that. Like, you can't control when Trump fires off a tweet, or when the White House comes in and tries to, whether it was strategically released or not, the positive spin on the trade wars. Like I said, I think it was the foil. We were about to break that level that I was wanting to see broken, and so they gave the market a little temporary stay of execution, we'll call it. But so what that did, where I'm going with that is, that trend line that I had there, you can see it, that again, that downtrend line was taken out that day. And I'll see this with the security sometime, but the fact that it was really not natural market action, in other words, not just a natural buyer, a day where 9:30 to 4 p.m. where all the buyers in the world met all the sellers at that point in time and kind of duked it out. That's what technical analysis is all about. That's what will drive a stock up and down. There was, a catalyst that spiked that, but you can see it's kind of a reversion back to not necessarily the mean, but where we were before. Because once we drop back below, see how we've been respecting the trend line again? See all those candles? And somebody asked me today on the site earlier today, I had a couple inquiries, hey, what are objective levels to short? And that was this morning, and I said 182.52, which I said we're there right now, and that downtrend line where we have intersecting resistance, price resistance and downtrend line, we were there. And look at this, how many times we hit that today. We hit it, and these are 60-minute candles. Keep in mind, if you're on a 1-minute chart, you're going to have more reactions. Since we broke it, 1, 2, the top of these candles, 3, 4, 5. What is that? 1, 2, 3, 4, 5, and then another one there. Or yeah, 1, 2, 3, 4, 5, 6, 7 candles, 6 consecutive, 7 total, and we're still below it. So there it is. Yeah, it's where we close the day, right on that trend line. You can see the body, the fat part of that candle is there. So those are levels. Those are levels to watch. Now, tomorrow, as has been the case lately, we're probably going to gap up or down. Today was just a mild gap because it was more of a consolidation day. So we'll either gap above, and if we do, well, there's 183.52 still yet to be taken out. And what I said in that post earlier, look, that's the first objective shorting area. We're in a near-term downtrend, that we know since off the highs. So we're in markets in short the rips mode instead of buy the dips. So if you get a rip up here, next resistance comes in around 185.50 to about 186.25. That's what I call a resistance zone. And so if we happen to pop this level, that would be your next objective short area. And after that, if we keep going up, you might want to just hold off, because if we are where I think we're at in the cycle of things, we'll probably not power up that high. It is possible. I told you I don't want us to get anywhere near the top of that area there. Not the end of the world, but if we do, it's just going to kind of obscure my near-term outlook. Let's just leave it at that. So what I think will happen, probably we may have seen the end of this consolidation today, and we resume things tomorrow. But again, we have to take out those lows. And should we pop up, I'm okay with a pop up to 185.50 to 186.25 or so in that range, but not much more than that. So if it happens, we'll just go from there. Let's just cross that bridge if and when we get to it. SPY, similar story. There's a downtrend line in SPY, you can see there. So I'm just pointing out levels to watch, and that's it. So these are little, what I call micro levels. And again, the most important, most significant would be a break below the recent lows, and at least for the bearish case, and that would open the door to what I believe will be the next wave of impulsive selling. This was impulsive selling. This is just choppy consolidation, and but not really a trend. A big sideways trend. This was a near-term downtrend, and that's what I'm looking for there. And if it goes the other way, we keep popping up as those levels. If we start to pop above, the top of that resistance zone on SPY, about 291 or so, and we get up. Of course, if we take out, if we recover and get back above that big green candle from the other day, then that starts to, like I said, just kind of obscure the near-term outlook. There's still some downtrend lines off the highs that may come into play. So anything's possible. We could consolidate for a while, chop around in here, but I'm favoring a resumption of this downtrend soon, just based on where we are and things. But until you see a break below there, you don't want to, in my opinion, you don't want to bet it too hard. Just kind of, if you have shorts, sit tight, and that might be a time to add on, and maybe at that point just trail stops down. All right, we'll wrap it up here. And again, if anything big happens tomorrow, I'll do an update. If it's another go nowhere day and there's not any big new technical developments, we'll just skip the end of the day wrap. And of course, I'll do intraday updates on the site and in the trading room. And if you remember and you have any questions, just drop me a line there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.